Hello and welcome to This Week in Property. I'm your host, Richard Swan, and in today's show, we're going to have a nice, fascinating conversation with a gentleman called Mike Kovacs, who was the founder of Castleforge. Now, if you've not heard of them, Castleforge, a London-based property investment firm founded way back in 2010, and these guys and girls now have invested approximately £1 billion worth of asset value, and that's throughout the UK and Europe. So people who know what they're doing, fascinating subjects, no doubt, that we can kick around, as they say, and we can see Mike's own opinions and experiences about the markets and what's going on, because I think maybe research might become one of the key phrases from today, because once it's safe to do so, and you can jump into the show notes and, follow the links and go off and see Castleforge, you'll see that that's a big thing behind them. It's a massive thing in the plays that they make. But hey, we will get to that. First of all, Mike, thanks a million for being on the show today.
Absolutely. Thanks a lot for having me, Richard.
Great stuff. So, Castleforge, the markets, opinions, things going back and forth. We'll get into all that. But what about Mike the man? What about kind of pre-Castleforge days? You never came out the womb and just walked into an idea of founding Castleforge. So if someone bumps into you at some kind of networking event or at a party and they ask, how did you get here? What's your the twists and turns of your career? How would you explain it to them?
Sure, absolutely. So we started Castleforge back in 2010. And before that, and much before that, I was in banking in New York. And I was a graduate. I just graduated university, ready for the big city in New York, and realized very quickly that I was hired to sit in the office for 24 hours a day or whatever it was that graduates were hired to do in banking.
It sounds blissful.
yeah, exactly. So it wouldn't be any surprise to you then that I tried to extricate myself as quickly as I could. I knew a friend of mine from university, a bit older than me, who went into the property space a couple of years before me, and he was always very smart. He sort of knew what drove people. And he called me up, and this is not a joke, at 3 o'clock in the morning, but at the office, knowing that I would be there, and it was February, so it was miserable. And he said, "Hey, how you doing? Are you enjoying life? Because there's a job that's opened up in the property space, and I know you always wanted to do that in Europe. And you got to tell me in a week whether you want to take it." So timing is everything. And so he got me to say yes very quickly. So I was on my way to London, I guess, back in 2006, and never looked back. Been here since.
Wow, you certainly haven't looked back. That's fascinating. And I noticed that you mentioned there that he knew, he said, you've been looking to get into property. So what was it? What had happened? Was it while you were doing the banking in New York that you started to see, particular patterns in real estate? Or has it always just been something you fancied on a personal level?
Yeah, no, he and I were friends at university, and the two of us were always involved in the property, whatever it was, club. Yes, it was something that we always really enjoyed doing. And I ended up in New York almost just getting pushed into banking because that's what everybody in my group was doing. And then thankfully very quickly realized it wasn't actually what I wanted to do. So property was calling, and I'm glad I picked up the phone at 3 o'clock in the morning.
That's fantastic. Brilliant stuff. And that was, so you mentioned there 2006, and then of course Castleforge 2010. What do we say about the space in the middle there about, doing projects, you're getting involved in things before you have this idea for Castleforge?
Yep.
Yeah,
absolutely. So I went to work for a US-based global fund manager for, 4 years then. And it was an amazing experience. I mean, it was, for somebody my age, I didn't know a thing. I mean, really, I was hired to basically carry the bags of the entire team over here. So I learned very quickly how to carry bags, but then also how to do some other things. So I got to go over to Europe a lot. We were doing projects in Paris. We were doing some projects in Germany, all across the UK. And even at times, the firm was thinking of expanding to India and China, so they sent me on a plane over there.
Wow.
So we got a lot of mileage under my belt at a very young age. Again, trying to figure out what on earth was going on as just about a graduate. But it was a great experience, and one that I think very quickly led me to believe that, along with a colleague of mine, so we were around the same age, came in around the same time. In 2010, we sort of sat there and said, do you think we could do this together? And so that was it. And it is a ton of youthful ignorance, I think,
Yeah.
to do that. We were only 26 at the time.
Wow.
And looking back on it, I think if we knew what we knew now, that how difficult setting up a business and everything is, you question whether or not you do it. But thankfully, at 26, you didn't know any better. So there you go.
No, exactly. But look at you now. I mean, look at what you've actually built. It's incredible. So I suppose there is something in the ignorance is bliss phrase that they throw about. And you're obviously a fast learner. You've obviously then picked up on things and went through certain challenges. Is there anything that sticks out in your head when you look back at those early days of what those the biggest of the challenges were for you?
Oh, absolutely. I mean, I think this is 2010, so the world had just blown up, basically.
Yeah, exactly.
At least financially. And so the biggest challenge was not actually finding the projects, because there were plenty of projects.
Yeah.
It was the money, because first off, not anybody wanted to give you the money. And second of all, the two 26-year-olds are telling you that they're going to build this 100,000 foot office building and trying to get people to believe you was also very difficult. So it was a difficult fundraising environment. It was very challenging to get projects off the ground. We were fortunate and got lucky by, you have 100 conversations and one comes off. So, we sort of, a lot of so we got a couple of projects early off the ground, and that kind of propelled us towards building a track record. But yeah, that was definitely the biggest challenge in 2010 post GFC. Trying to get any money for projects when real estate was not it was whatever, it was a 4-letter word at that point in time.
That's a nice diplomatic way of putting it, that's for sure. And was it that's the kind of the bad news, the kind of challenges, the puzzles, the problems that come your way. But was there a particular moment or a milestone that you thought, yeah, actually we are onto something, that this is good or this is going to be good? Can you remember a defining moment at all?
Sure, absolutely. I remember that when we bought our first office project in London, it was about 2010 actually.
Right.
And the price that we paid and after the refurbishment cost, I remember when we costed up the building refurbishment, I remember thinking, we just paid and are going to build basically what is going to look like a brand new building over in Farringdon, in central London, for less than it costs to build a building today. And even if you got the land for free.
Right.
And then I thought, all right, well, how bad can that get? Right? We didn't have debt on the project. So there was no bank that was going to take it away from us. It was just a waiting game.
Yeah.
And you thought to yourself, gosh, if I just bought free land, it's actually limited priced land in central London. How bad is this really going to turn out to be, right?
Yeah.
So for us, that focus on the cost basis from an early day, right, relative to construction, that was when I remember my partner and I, we sort of just looked at each other and thought, okay, I think we're going to be all right on this one.
Things are looking good. I like that. That's fantastic. Great starts, great origins, that's for sure. And fast forwarding to now, and you bump into someone and just to ask about you, and the Castleforge name comes up. How do you present it now? How do you actually explain to someone else listening? Because if you, again, listeners, viewers, when it's safe to do so, go to the show notes page. You'll see the website for the company. It's tremendous what they do. Loads of great services. But is there a particular way that you pitch, if you like, what you guys do?
Yeah, it's evolved over time. So early days, we pitched ourselves as a London office developer. Right? And that's kind of what we did. And that was predominantly what we did. I think the first 10 projects we worked on were London or London area office developments. And over time, I think we retained that as part of the organization. So we always wanted to build up the organization and always have in-house development capabilities. So unlike a lot of maybe fund management businesses who joint venture with or work with developers, we are the capital and we are the developer. So that was something that was always very important for us to carry through. But what we've added to the business over time is, well, first off, I think we realized that we wanted to be more than a London office developer. Number one, because frankly, we wanted to see the business grow, but moreover, what happens when the London office market isn't doing well? Right?
That's
so I think we wanted to diversify our business. So we got into other sectors. We got into other geographies. We're getting into other geographies in continental Europe. But we also thought that for a long time, our industry, private equity real estate, was a lot of real estate for property, not a whole lot of private equity. Right? There wasn't very much company-focused activity, wasn't a lot of like operational activity. And we thought, you know what, if we can layer on a level of operational complexity to the real estate. So if we can not only just buy buildings, but then operate them and do it in a better way than other people can.
right.
Well, then that for us, we thought was going to drive returns more than just traditionally just buying and kind of re-tenanting or holding or whatever the case may be.
Yeah.
So we got into operating businesses as well.
Wow.
And then the other thing that we added, because we wanted to figure out, well, what operating business should we even be in the first place? We added a research function. So we built a whole team around research that really tries to stay ahead of the curve, really try to understand where's the world going to be in 5 years from now? What are the sectors that are either out of favor, or maybe the market doesn't see that they need, that there's going to be rental growth or something like that. And then we get into those operating businesses. So it kind of all works together. But yeah, we definitely added a lot over the last 12 years.
Right, yeah. So you're starting to diversify, you're starting to layer on top, you're protecting your own investments by pulling in, and there's that word I mentioned at the start, research. I mean, that whole research idea and getting the analysts, getting the expertise to do that, focusing on their areas, is that something you always thought about? Did it come from the banking stages, New York? Was it you and the guys just seeing what was happening? How would you explain that part, do you think?
Yeah, I think so. I think I've always been really, and apologies, my camera, we haven't gotten the technology right yet. It's zooming in on me automatically and then zooming out. So apologies to your viewers at home. Unfortunately, I can't figure out how to fix that.
Looks very fancy.
Yeah, exactly. Right. There's some cameraman here behind the scenes. Right. Just technology that's not working. So yeah, I've always been really, I'd say I've always admired a really big private equity real estate group called Blackstone. You probably heard.
Yes, of course, of course.
So that was my first job, actually, was in banking with Blackstone. So I always thought, which was really interesting about what they did, was they didn't just go from one building to the next and then buy it because it was 10% cheaper than market pricing and then sell it and whatever. Mm-hmm. What they would do is they would build businesses in certain sectors that they thought was interesting. So they were very early movers in logistics and distribution, and they built a whole business behind that. They were very early movers in residential in the US, buying up a number of homes and kind of building a business behind that. And they always really performed very well. And so we kind of looked at that and thought, you know what, maybe they know something that the rest of the market doesn't know yet, or that we don't know certainly yet. But it feels like this ability to go into certain sectors because your research is telling you that there's a lot of growth behind it, right? Was always something that was inspiring. And so I think we thought, well, let's try to do that at a small scale. Like, let's try to actually build up our own internal research function so that we could try to see ahead, and maybe, be able to dodge some of the headwinds, as it were, in the market.
No, it certainly makes sense. And just try to keep a I suppose it's all the different factors, isn't it? It's all the angles that can come in. You know, people sometimes try and simplify the property world too much because they're just looking at the unit that they're maybe developing on the street that they're working in, inside the town that they're working in, and they don't see all the different bubbles. And one of in fact, there was quite a number of things I was chatting away with your team when we started to arrange our interview. They were talking about how much research you guys have done, having a look at, you know, the inflation points and pressures around the world and how that's coming to bear. Operations much further afield, such as the Russian and Ukraine conflict that's going on, and how all of these things, you know, the butterfly effect, crossovers, overlaps, you name it, it can become an incredible, complex, but very connected world, can't it?
And you're absolutely right. And it's been so connected in the last 40 years, really. I mean, really, that's when the whole sort of globalization and everything really took off. Yeah, no, we've done a lot of research on inflation and interest rates and everything going forward. And it's funny because Ukraine and COVID and all of that that's really happened in the last couple of years, a lot of that is what I think a lot of inflation is being blamed on. And probably rightly so. I mean, there's probably an element of supply chain issues and energy issues and everything that result from these two, you know, major events. But actually, you know, we've been speaking about inflation back in 2018, 19, 20, pre-COVID, pre-Ukraine, as we think that there's this change happening in the world, right? And that change is being brought about by a number of different factors. So let's ignore it. We'll put aside Ukraine and COVID just for the moment, right? And this is why I think we think that inflation's sort of here to stay. And I don't mean 10% or whatever it is annually, but it's not 0% anymore either, right?
Yeah.
It's somewhere in the middle.
Yeah.
So here's a really interesting stat. 20 years ago, the average wage differential between a US and a Chinese worker was 35-1.
Wow.
That's now 5-1.
Wow.
Okay, so it's like the idea that you could just offshore production, you know, 20 years ago was something where you could pick a lot of low-hanging fruit, and now you can't, right?
Yeah.
Here's another thing. So, when Nixon went to China in the 70s, when the Berlin Wall fell in the 80s and 90s, you had a huge amount of global labor that just plugged itself into the global market, right? I mean, probably doubled the size of the global workforce relative to kind of developed Western economies at that point in time. That's going to have an effect on inflation and deflation, right? That just adds a lot of output potentially to the system. I don't know where the next doubling of the global labor force is coming from, and in fact, it's probably going in the other direction, right? So if you look at China's employment population, so working age population, that's actually declining. So that peaked 5 years ago. It's on its way down. Right. The UK is no longer part of the EU from the perspective of the labor supply, right? So you just have a lot of kind of balkanization of the world's labor markets and all of them. By the way, what also happened in the 80s, the Reagan and Thatcher revolutions, whether it was good or bad for people, let's leave that to the side for a moment. It just deregulated and added like fewer capital controls to the market. It just opened things up. Yeah. Everything now is going in the other direction. Right. So apart from Ukraine and COVID, and that's like temporary or whatever, you kind of just see this world becoming shorter and shorter of labor and needing more and more capital. And that is just going to push interest rates up. It's going to push prices up. It's something that we don't see as transitory. We never did. We're just going to have to get used to, as investors, as property investors, inflation just being part of the next 10 or 15 years. Right. Really, just something we're going to have to juggle around in the due diligence and all the numbers we're playing with. Yeah, and listen, I mean, I don't remember a time where there was inflation, so I'll have to be reading a lot and studying a lot. But look, there are people who did very well in inflationary times in property. right?
Exactly.
So
Exactly.
it's really just about thinking, how does this affect my portfolio and how can I get ready for it if indeed that's what ends up happening?
Yeah, that's it. You're putting in your own stress factors. I'll start to expand the kind of interest rates I'm playing with on my numbers. What if X, Y, or Z happens? Where do I sit? Oh, the investment's still okay. Well,
Yeah, that's right.
And you factor out. Is there a danger between being really clever, research, running the numbers, trying to think of all the different pressure points, but at the same time, you don't want to fall into the trap of, analysis paralysis, do you? So is it a hard thing to juggle?
Yeah, you're absolutely right. You need to pay attention to the big picture, but then also, you don't want to be looking at the big map and then stumble, right? And trip on yourself. You're not looking down in front of, what's in front of your own feet.
Yeah.
So I think you're right. You have to combine the two, and it's really important to combine the two. For us, like I said, that's why we always were big on keeping the development side of the business, making sure that we were super close to the market. I can tell you in every one of our markets that we're in, because we have a whole team there, I can tell you what's going on with rents. I can tell you what's going on in terms of demand from the tenant base, much more so than reading a big, broker report or something like that. So I think it's really important. But, on the other side, look, it is important to see, broadly speaking, where the world's going. And we always like to say that, if you're not doing that, you could be the best investor in the world at the asset level and the best picker of this building, that building, the right street, the wrong street. Yeah. But if you invested in shopping malls in 2016, it doesn't matter how good of an investor you were, right? You were sort of rearranging deck chairs on the Titanic. And so, you want to be able to rearrange the deck chairs, but just, make sure that you're not sailing on the Titanic. So I think you need to do both.
Yeah, that tough balance. I like that. Great analogies as well. That's fantastic. And I think one of the things that comes to mind when you started to paint a picture there of the asset, the individual, development site, etc., and you hone in on it, I remind myself of the fact, and it's a great fact for an investor, we're on an island. In the UK, supply demand, there is a real tight constraint around that makes it a little bit easier, a little more conservative, a little more easy to plan out when you think about an investor. Whereas, Europe and Asia and so on, much, much bigger and, can be a bigger factor, I suppose, to all those pressure points. You guys are doing both. You guys are investing in UK, but you're also in Europe. So do you see a big kilter between the two? Is there a massive difference between the isolated island of the UK when it comes to assets and the rest of Europe, or is it not as simple as that?
I think there are differences, of course, right? There are cultural differences, there are preferences, there are one versus the other. The UK, for example, has much higher penetration rates of e-commerce than continental Europe. So, industrial and logistics have done super well in the UK, even more so than continental Europe. Their residential is regulated in a different way. Yeah. So there are rules that are different. Even in the UK, Scotland and England have different regulations around rentals. So I think that, yes, there are differences, obviously, when it comes to either preferences or cultural preferences or sometimes even just the development of a certain industry in that particular market. Flexible offices is way ahead of the curve in the UK compared to continental Europe. And that might simply be due to the fact that IWG or Regis started in the UK, right? So maybe they pulled the market along faster. And so Europe has further to catch up. But broadly speaking, we do see similarities across all of the countries that we're invested in. It's the same themes or the same drivers that would make somebody in the UK want, as an office owner or as a business owner, flexibility in their leasing. Right? Everybody wants more flexibility if you don't have to pay that much more for it. It's still the same driver as over in Germany or over in France or Spain or something like that. It's ultimately it's a similar driver, even if the cultural preference is slightly different. So I think the ability to go onto the European continent is with the same projects and same kind of types of businesses that we have in the UK definitely exists. But yeah, you have to be a little bit careful that you don't produce something for a preference or a cultural preference that nobody wants.
Yeah.
So broadly speaking,
Right, fascinating. And you mentioned how you're keeping your ear close to the ground with the development side of the business, and it's a very clever thing to do. It really is. What are the main things you're seeing there these days? Because if we turn to the media and just a simple headline, it's all about rising costs, rising development costs, poor supply, things held back for so many months. So we've got that in the media world. We've then got inside, England, Wales, Scotland, etc. All the things such as planning applications, permitted development rights, governments trying to put their fingers in and change the landscape of the high street. A lot of offices, again, the media side, offices complaining, well, not really everybody's back. Maybe we shouldn't have bought this big office because of COVID and so on. I mean, in amongst all of that, what are the main takeaways that you're seeing right now?
Sure. So your point on construction costs, yes, they are.
You can see that.
Sort of avoid a pun here. I mean, they are going. They really are.
Yeah.
And we don't really see that pulling back.
Right. Right.
Frankly, a huge percentage of the cost of building a building is labor. I mean, even if you're talking about you're putting in an air handling unit or something, and theoretically that's a material, but somebody's labor went into kind of producing that, right? So we really don't see inflation or cost backing off on the construction side. So that's just something that developers are going to have to deal with. And I think that your ability to deal with that depends on how much pricing power you have in whatever you're developing, right? So how necessary is that for the market? If it's really necessary, you'll pass it straight on to the tenants. If it's not really necessary, you really have to ask yourself, well, how much of this am I actually going to be able to pass on to my tenants? So, okay, a couple examples. In the office market, actually, even within the office market, it's a perfect kind of split. So on one hand, you have big multinationals making very big ESG pledges. We want to be carbon neutral by X date or whatever it is. Government putting regulation in place saying that by 2028 or 2027 and then 2030, you need a certain EPC rating to lease a building. And just the drive for employee wellness and everything back in the office. And for the best office buildings has gone through the roof as well, right? And so tenants are saying, I know it went up in price a little bit, or I know rents will have gone up, or I know rents need to go up, but there's not much I can do about it. And I know the whole work from home argument and everything, and that may be the case, right? And but I think that the best of the best is probably going to see an increase, and it is seeing an increase in rent. So rents today for the best offices, definitely higher than pre-COVID.
Right.
They are, right? Then there's the rest of the office market. And that's the kind of stuff that's pretty dangerous to be involved in, because at that point, if really all you're doing is offering Wi-Fi and some free coffee in the office, but it's not a really pleasant place to be, and it doesn't meet any of the ESG targets, and it's like, well, I might as well be at home. But at that point, then you don't have any pricing power left, right? And you're just a commodity. And to be in a declining market, subsector of the market, with a commodity product, the price are going up, that's not a part of the market you want to be in. So I think that it really comes down to, yes, costs are going up, but your ability to price in those costs and push on that through rent, especially on the office side, for example, has everything to do with how necessary is your product compared to, something that somebody can do without.
Gotcha. It's amazing how many impacts there are. But you're right. It's not just there is this thing and it impacts the market. No, it depends also where are you in the market, because you just explained there, you can have the office owner, they're at the cream of the crop. They're in a very specific part of the bell curve, if you like, and they're affected completely differently from someone, with a, as you said, much lesser spec on their buildings that are there. It's very true. It's not a black and white issue, that's for sure.
I think that's right. You touched on permitted development rights. I think that's super interesting. I wonder, I look around at the office space across the country, and I think not every office building needs to still be an office building.
Exactly.
So, maybe look, we're sort of 9 years on now, I think, 8, 9, 10 years on from when permitted development rights were introduced, and I think that was meant to be reasonably temporary. Memory was like 3 years or something, and you had Bristol, Birmingham. I think both of those markets have seen double-digit declines in their office stock, and they've seen rental growth as a result. But they've also seen apartment growth, and so maybe it's not a bad thing. It's actually to be able to repurpose offices that nobody needs or wants into housing, because hey, we've got a housing shortage across the country, so doesn't that make sense? So I think there's going to be, I think the world's going through this kind of topsy-turvy time of, it's like, does that asset class need to exist anymore? Or does that only need to exist? It can be repurposed into other things. And so you'll start to see a lot of that kind of sort itself out over time. But yeah, it's going to be an interesting time of repurposing and renovating, especially since nobody wants to knock buildings down anymore. From a government perspective, there's no reason to. You might as well have. And government, you talk about regulation. I think last week, the national government called in, it wasn't last week, maybe it was last month, the South Bank ITV scheme, because of the fact that it was ground up development, because we're knocking the building down. And so, they placed the contract, they were ready to go on site, and then suddenly the government said, actually, hold on a second, we want to reassess whether or not you should be knocking the building down. So it's just going to be a very, very interesting time over the next 5 or 10 years.
Yeah, definitely. And on that time, I wonder what's the plans for Castleforge? What things have we got in the future? Is there any specific areas that you personally really want to, move into, to diversify into, or have you got certain goals or milestones in your mind?
I think so. I think that our goal, at least in the near to medium term, is we want to be an expert in a couple of narrow, specific fields. So, we want to be an expert in flexible offices. So we started a flexible office operating company called Kovacs.
Right. Okay.
Locations now, a number in Scotland, actually, Glasgow and Edinburgh, and we've got a business called Ocasa, which is our residential specialist in that kind of category. And so what we try to do is increase the number of asset types that we can be a specialist in. And then along with that, we try to increase the number of geographies that we can be a specialist in. So traditionally, we were only in the UK, but then we've recently opened our first Kovacs building in Brussels, in Belgium, and that has been going phenomenally well. We'll be opening up in, the Netherlands and in Germany over the next year.
Fantastic.
Office sector. And so, what I think the plan is, we'd love to be able to offer our investors the ability to diversify their portfolios, but with us. And that means to be kind of a specialist along different subsectors and then along different geographies, but not have to go anywhere else. So we can sort of be a one-stop shop for that. I think that's our plan. In the near term. And to be a specialist in each of those categories is really hard. It requires a team that can operate real estate at the local level. It requires research to be able to figure out what sectors you want to be a specialist in. So it's just about making all 3 of those components of the business, including being a developer still.
Fantastic. I tell you, you have got a lot going on. It's a very varied field. It's fantastic, and I think that makes me guess. I don't see you returning to the banking industry. Yeah, would I be right with that?
No,
it's going. Oh, fantastic.
Whatever. 1 year was enough.
1 year was maybe even the first month. I think by the sounds of those 24 hours in the office.
Right. And by the way, it was 2006. From that, I probably got out right in the time. So very fortunate telephone call to pick up.
Oh, it certainly was. Your timing is impeccable, that's for sure. Now, listen, I want to be respectful of your time. I could just chat with you all day about investment and ideas and your kind of forecasts and stuff. But I think if you to look back in your career, look back on all the things you've managed to do and the projects you've taken forward, the companies you've built, the different projects that you've ticked off, have you got some favourites? Is there some, I see bringing that project over the line, that I really got a lot of satisfaction from that, or being able to deliver this new service to our investors. But is there any key points that jump out for you?
I think so. I think, so I mentioned our first project, our first development.
Yeah.
We were able to double the area on the building site by using space better at like ground floor level and actually basement. So it's like not even that we went up much higher. But we added a bunch of residential to the site, and so that meant that we added housing for a country that was starting with housing. We increased the floor area of the offices by 30%. So we added more office area for small businesses that were really looking for office space to grow. So I think a lot of these are really meaningful from the sense of you are providing a service. To not only your investors, because you're obviously doing all that, but if you're adding housing to a country that needs it, if you're adding offices, at least the categories of offices that people do need to solve things like climate change, right? That's what it is going forward. I think it's really important. And so, for us, we get a lot of kind of joy out of being able to do that. I think that that drives us to continue doing what we're doing. And it's really funny because I have some folks ask me, is this the right time to be investing? Right? I mean, are we going into a recession and everything? And I'm obviously we're concerned about that, but the ability to sort of keep providing that service is great. But I also think it dovetails with my thoughts on that, which is, you don't want to stay out of the market, right? Just because who knows what's going to happen next year. You don't want to time the market. Staying out of the market sometimes, it's just like money that you're never going to be able to get back if you miss it, because things like it really tough. So I think it's more about, if you are going to be in the market and you are always providing this kind of service and being able to continue developing, you just want to protect yourself, right? So which areas do you think that you want to avoid, or we don't take a lot of leverage on. I mentioned that project was no leverage, right? So you just need to kind of have staying power in property, because that's literally the name of the game in property. It's about, I know so many people GFC who kind of told me, well, that project came good and the market recovered, but it was only if I see in the market, and then I was kind of over leveraging the banks with the building back for me. You kind of think that is the game, actually. It's not about, right? It's always going to kind of come good if you're building the right product and everything, but it's just about making sure that as the waters get a bit choppy, you're not leveraging yourself, you're giving yourself the ability to stay in the game, and just stay in the market and keep investing, but just on a defensive basis. That's just maybe a takeaway that I think we sometimes it's easy to forget, right? Anyway.
I'll tell you, that is some wise words to end on. It really is absolutely perfect. Staying in the market. You're not just trying to time and judge and forecast the market. No, the market is the market. You should still be investing, but as the great Benjamin Graham would tell you, you need to be an intelligent investor. That's all. And as you say, if you stay in the game, then things are going to work out for you. Fantastic. That's brilliant. I love it. What a great positive way to finish, Mike. And amongst the current, negative media headlines that are out there.
No. Hey, listen, if the history is any guide, property should be a pretty decent business to be in over the next couple of years. So we're pretty excited about what the near medium term holds for Castleforge, as well as other property investors out there.
Tremendous, Mike. Well, listen, for your time today and sharing your insights and your words of wisdom, thank you very much indeed.
Thanks a lot, Richard. Thanks for having me.
Well, I hope you enjoyed today's show as much as I did. Remember, with the guests that you just saw, go into the show notes for the page, because all of their links are there so that you can get in touch and to get more information. And talking about getting more information, more guests, more insights, more knowledge, etc., make sure you're subscribed. Get the subscription done, get the notifications on, and then we'll always keep in touch with you every single time a brand new show is going to come out. So thanks for tuning to This Week in Property.